Good morning, members. We have quorum and are now live on YouTube.
Thank you, Chris Ann. So welcome to meeting number 30 of the TTC's Audit and Risk Management Committee meeting. Chris Ann, could I ask you to start by reading the land acknowledgement?
Thank you, Chair. We acknowledge the land we are meeting on is the traditional territory of many nations, including the Mississaugas of the Credit, the Anishinaabe, the Chippewa, the Haudenosaunee, and the Wendat peoples, and is now home to many diverse First Nations, Inuit, and Métis peoples. We also acknowledge that Toronto is covered by Treaty 13 with the Mississaugas of the Credit.
Thank you, Chris Ann. Declarations of interest, I have none. Fenton, do you have any? No. Julie?
No.
Okay. So minutes of the previous meeting, I have no comments on those. Fenton, are you prepared to move adoption of those minutes?
Absolutely, Chair.
Okay. And Julie, are you in favor of that as well?
In favor, thank you.
All right, that's approved. Okay, looking at the agenda today, the first item is KPMG is going to report on their audit findings. They will be presenting on that. Then management will take us through a recap of the draft financial statements. The annual report for the commission, excluding the financial statements, is a separate agenda item. Unless Fenton or Julie, you have any questions on that, I'd propose that we move that now.
So moved.
Let's move it.
Okay. All in favor? That's approved.
In favor.
Yep. Then the asset retirement obligations, I think we should talk to management about that one. Number 5 is the uncollectible accounts, which are de minimis this year. So I'd entertain a motion to approve that item.
I'll move that.
Okay. Fenton, you're in favor as well? Okay, that's fine. Number 6 is the safety review. There's a presentation on that, and I will hold that. 7th is the work plan update from Virage in internal audit. I will hold that. Number 8, a presentation on the status of the Auditor General fair evasion recommendations. I will hold that. And then we will have a committee of the whole presentation on cybersecurity, which I will hold. So given all that, let's start with item number 1. Kevin, I think you and perhaps some of your associates are here. If you could introduce your colleagues and walk through the audit findings for us, that would be great.
Sure, will do. Thanks, everyone, and happy to be with you this morning. I am joined by Reagan Travers and by Sal DeMastro. These two gentlemen will work with me in terms of presenting our audit findings report. It's quite a lengthy document, so we intend on hitting what we believe to be the highlights of the document. Certainly feel free to stop us as we proceed, or we'd be just as happy responding to questions at the conclusion of the formal part of the presentation. So Reagan, if I could ask you to move in the deck to the audit highlights slide, please.
Absolutely.
So this slide that you see in front of you, audit highlights, and for those that may be on the phone and don't have the access to the visual, this is slide 4 in our deck. So audit highlights, I often refer to this page as our audit in a page. So it contains high-level information with respect to what's contained in the rest of the document. So the good news is, in terms of status of the audit, we have completed the work we need to do at this point in time in order to issue our signed unqualified opinion. We do have a slide that provides additional details, but really the only things that are outstanding at this point in time are completing our conversations with this committee today, then understanding that the board approves the financial statements. Once that's done, management will provide to us a signed representation letter, and we in turn will then issue our signed unqualified audit opinion. We were able to conduct our audit in accordance with the plan that was presented to this committee some months ago. There were no corrected audit differences that were noted during the course of the audit. The only uncorrected difference was the reversal of the item that was noted the prior year. So that now goes away entirely as well. With respect to control deficiencies, very pleased to report that there were no significant control deficiencies noted during the course of performing our audit in the current period. If we could move to the next slide, please, Reagan. So as I mentioned earlier, in terms of status of the audit, we are where we need to be at this point in time. Had there been other things outstanding, whether it be samples or receiving information from management or confirmations outstanding, they would have appeared on this page, but there is nothing. So that's all good news. If we can go to the next slide, please, Reagan. So the next two slides I'll speak to as one comment, and that is when we presented our audit plan, we noted that there were two presumed fraud risks. And these weren't risks that were considered to be necessarily elevated specific to the TTC, but rather in every financial statement audit, we are required to presume that there is a fraud risk that relates to management's ability to override controls and with respect to the recognition of revenue, specifically as it relates to fraud. We are then required to design and to perform audit procedures to sufficiently mitigate those risks to an acceptably low level. These two slides, so slides 6 and 7 of our deck, just indicate that those procedures have been performed without any issues noted. So I'm going to pass it to Sal, who'll take you through the next part of the document.
Thank you, Kevin. So on these next few slides, we'll discuss some of the other areas of focus. These are areas where we spent a significant amount of time on during the audit. So the first area of focus is passenger services revenue. Total passenger services revenue for the year was $743 million. And of that amount, the passenger services revenue earned that related to Presto was $674 million. So we perform a suite of procedures over passenger services revenue, which include obtaining a direct third-party confirmation from Metrolinx. We then reconcile the amounts from the confirmation to the total revenues reflected in TTC's financial reporting records. And then additionally, we will review the relevant service agreements between Metrolinx and the TTC. We also review a sample of monthly reconciliations performed by management, which reconciles TTC's records to Metrolinx and then also to bank payment. We perform control testing over the cash and ticket collection process. And then lastly, we vouch cash deposits to supporting documentation. So overall, no exceptions were noted during the testing of passenger services revenue. The next area of focus is the unsettled accident claims. So this is a significant complex estimate for TTC and for the audit overall. So unsettled accident claims amounted to roughly $146 million at year-end 2022, which is a slight increase of around $7 million from prior year. Unsettled accident claims are a liability that's computed by management's actuarial experts, and then we in turn use our actuarial experts at KPMG to review the computation. So some of the procedures that we perform include reviewing the actuarial report prepared by management's experts. We review the methodology and underlying assumptions used to formulate management's estimate. We perform testing of the underlying data. And then lastly, we perform testing over the claims reserve setup process and the claims payment process. So no significant differences were found during our testing of this liability. And as well, we can conclude that the estimate was appropriate. Okay, the next one is employee future benefits, which is another significant complex estimate. So the TTC has employee benefit plans, which include post-employment plans, post-retirement plans, and pension plans. At year-end, the liability amounted to $912 million, which is roughly $60 million higher than 2021. So employee future benefits represents a liability computed by management's actuarial experts. And again, in turn, we use our actuarial experts at KPMG to review and help us perform procedures over the liability. So some of the procedures include reviewing the actual report prepared by management's expert. We review the methodology and the underlying assumptions that are used to formulate the estimate. And then lastly, we perform testing on the underlying membership data. So no significant differences were identified during our audit testing, and we concluded that the estimate was appropriate. So I'm going to pass it on to Regan to continue the presentation.
Thanks a lot, Sal. Okay, so the next area of focus is the tangible capital assets. TTC is a very capital-intensive business and has $12.6 billion of tangible capital assets on the books. So we perform very robust testing over this. So we review the tangible capital asset continuity. We perform testing over additions and disposals. We also perform analytical procedures over the amortization expense. Throughout our testing, no exceptions were noted. So this next slide just comments on a few highlights from the financial statements. So the financial statement presentation is appropriate. There's no material disclosure omissions on the financial statements. Additionally, there was no updates to accounting standards this year that are relevant to the TTC. However, there is one in the pipeline for next year, which we speak to in the appendices a little bit further on in the presentation. With respect to the uncorrected and corrected audit differences, as Kevin already spoke to at the top of this, there was one uncorrected audit difference. This pertains to an item that was identified in the 2021 audit, and this is just the reversing impact that it has on 2022. This is in relation to the TCTI land transfer to the city, and the uncorrected difference goes away after this year. So at this point next year, we will not have that uncorrected difference to communicate to you. There was no corrected audit differences that we identified and were subsequently corrected by management. So there's no corrected differences and just the one uncorrected audit difference. And we concur with management that the uncorrected difference is not material. With respect to control deficiencies, we review controls to the extent that they're relevant to the financial statement audit. So we don't perform an audit over the controls. We don't issue an opinion on the controls. However, as we perform our work, if we do identify any significant control deficiencies, we communicate those to you. No deficiencies in internal controls were identified during the audit. So what I'm going to do is I'm going to pass it back to Kevin now to discuss some highlights in the appendices.
Thanks, Regan. I'm just going to touch on a couple of the appendices. We'll take them largely as being read, but I want to make a few comments on a couple of items. Appendix 4, change in accounting standards. As Regan has already mentioned, and as I know management has a report coming forward, the most significant change in accounting standards in some time facing public sector entities will be the adoption of asset retirement obligations, which will happen for your 2023 reporting year. It really references the situation where there are liabilities that exist, legal liabilities or obligations relating to assets that the organization has in their employ. I don't want to take much of management's thunder because I do know that they have a report coming later in the agenda. But what I will tell you is that we've been in communication and had discussion with management from prior to the planning phase of this project and through scoping so far. And we're very pleased with the work that's taken place so far at the TTC. I would even make the comment directly that so far, I would say of my experience with all of the public sector entities I deal with, TTC is probably further ahead in terms of the adoption of the standard than many other organizations are. And not just in terms of where they are, but also the quality of the work that's been done so far. So we are very much very happy with the work that's taken place so far with TTC in terms of the adoption of the standard and do not anticipate any issues in the reporting out for 2023. If I can ask you, Regan, to move to page 30. So within the remainder of the appendices, one other item I just wanted to highlight. One of the items that we're starting to see come up more and more in terms of audit committees or equivalent in terms of discussions relates to ESG type material. And it's likely years away in terms of being a required disclosure within many organizations' financial statements, but it has started to creep its way in. If you look at some of the European financial institutions, you're starting to see disclosures relating to ESG risks, as well as costs that are being incurred in order to mitigate some of those risks. Early on, I think what's important for audit committees and for boards to begin thinking about even now is to start looking around, understanding, asking management what data might be being collected even right now and measured and tracked with respect to ESG type metrics, because sooner rather than later, it's going to find its way onto your agenda. And it's important to start to have, I think, education type sessions, as well as start to understand how TTC, for example, might be collecting data relative to some of these items. So that's really the formal part of the presentation that KPMG has this morning, but we'd be very happy to respond to any questions that you may have.
Thank you very much, Kevin. It's worth noting to the rest of the committee that I met privately ahead of time with Kevin and Regan to go through this report as well. I think they've done a very thorough job. But with that, any questions of the external auditors? I'll start with you, Fenton.
No questions.
Okay. Julie?
I have only one minor one that's just for my own clarification. On page 8 in your report, you refer to unearned revenue from Presto. Just curious what that is.
So that pertains to essentially January January passes. So at December 31st, that's not earned. You've sold the passes to the customers. However, they haven't used that pass, so you still have that obligation to honor.
Yeah,
So it's just like an accounting convention, really, to recognize that.
Yeah, it's to ensure that the timing of the revenue recognition is
Okay.
in concert with the actual usage.
Okay. Yeah. Okay. Great. Thank you.
Okay, thanks, Julie. I had one question / comment, probably for you, Josie. I was intrigued as well with the concept of reporting around ESG and starting to collect data on that. And my question is, are we doing any work on that yet? And I'm thinking particularly in the formulation of our next strategic plan. Is this something that you're aware of that's on our radar screen of starting to look at measurements in that category?
so good morning, and thank you for the question, Chair. I would say that we are starting to think about it, maybe not in the formal sense of ESG. I know the city is starting some work there, but through our corporate plan, we are definitely putting lenses on the equity and the environmental and thinking about the governance elements. So it is something that I think once we get past this, the ARO PSAB requirements, we'll be turning our minds to it.
Okay, I think that's good. The one that I'm particularly interested in is carbon emissions. Given the Commission's strategy of moving to a zero emissions fleet or an all electric fleet, this seems to me something that we should be able to tell a very positive story on over the coming years. And I think it'd be really helpful to start to put together a baseline, as our fleet is converted, so we can really see what I expect will be, very good progress on that front. So I just wanted to say, I think that would be something that we should keep on our radar for the next strategic planning period.
Yes, and to that very point, though, we do have work well underway through our Green Fleet program, where we are tracking the carbon emission changes as we acquire new e-buses in particular and the infrastructure that goes with it. And we continue our work with the U of T, where we're looking at all our benefits and starting to actually put some articulation, quantification against the benefits that are related to social, environmental, and health requirements or benefits coming out of our program. So that particular point is work that is established, and we do have a baseline for that.
Okay, that's great. I'm glad to hear that. Okay, with that, I'll ask you, Fenton, to move adoption of this item. We will be referring it to the full board for their approval at the June 12th meeting. So can you do that?
So moved.
Okay, Julie, you're in favor as well?
Yes, in favor.
That's approved. Okay, next item is the consolidated financial statements. Josie, will you or someone from your staff give us a quick walkthrough on those statements?
Yes, good morning. Absolutely. I think annually we do bring this forward and are fully ready to provide you with a walkthrough. I just wanted to say that, part of our work here in the previous item as well, I just want to thank everyone for all the hard work. If I could just take a minute to KPMG and to the staff for the results that you just saw and for the work that you're about to see. And so I'm going to turn it over to Alex Kassar to do that walkthrough for you.
All right. Thank you. Thank you, Josie. I will just bringing up the statements on the screen, and as soon as sorry, I'm just trying to get the statements up on the screen. Are they being seen right now? You can just confirm.
Yes, we can see them.
Alex.
Okay, great. Okay, perfect. Okay, so thank you, Josie, for the introduction, and I will echo your comments in terms of thanking all the staff throughout the TTC. Completing the consolidated financial statements in an organization like TTC requires a contribution of many individuals, both in finance and also contribution from many of our operational areas as well. And it's through this collective effort they're able to meet all the year-end deadlines and get the material that we need to get to the city and to the auditors, KPMG, to complete the audit within the established timeframes. And so pleased to be here today to present the consolidated financial statements. So I'll start with the consolidated statement of financial position. This statement effectively has three key groupings, starting with our financial assets at the top. Essentially, the key item here is our subsidies receivable, which is valued at $1.2 billion. As it's split out in Note 5, it's actually comprised of two key components. There's a current portion, which relates to our essentially the operating and capital activities in 2022, which are still being lined up for payment, accruals relating to work completed in 2022, and that current portion is $506 million, and that's essentially coming essentially of the year's budgeted subsidy. The second portion of that amount is other recoverable amounts of $701 million, and reflects the city's ultimate obligation related to the portion of long-term liabilities which are funded on a cash basis as they become due. So in particular, employee future benefits for our post-retirement medical and dental plans, construction holdbacks, and accident claims. Then moving on to the liabilities, there are amounts for accounts payable and accrued liabilities, which comprises things like vacation pay accrual, wages payable at the end of the year, and remittances, also amounts due to our vendors, as well as holdbacks. I noticed the question that came up during the audit results on deferred revenue, and so I'll just add that there are customers that do effectively pay for the upcoming monthly pass before the end of December, and so to the extent they kind of select that option or they're automatically enrolled, that contributes to our deferred revenue. There's also, as you might appreciate, there's still some legacy tokens and tickets in our system, and so the value of those that are outstanding is incorporated there, as well as there are, for different groups, we sell what we call Presto bulk tickets. So for people who don't have Presto cards, it's possible to have a bulk ticket, and to the extent those items are outstanding, that's also captured in this deferred revenue. So we recognize it as revenue when the ride is actually taken, or in the case of monthly pass products, once obviously the time elapses over the course of the month. And then our largest liability is employee future benefits, and there is a Note 9 which lays out those amounts. And specifically, there's two key components to that. There is a WSIB and LTD, what we call post-employment employee future benefits, which total $269 million liability as of year end, and that amount is funded as it is incurred. And then there's the post-retirement benefits, a balance of $648 million. And most of that will ultimately be funded on a cash basis, as those claims are ultimately made. And obviously we're effectively accruing amounts for services which have been rendered, but a number of those payments are obviously well out into the future, balancing out the employees, current employee service with benefit payments that are projected to be due to them into the future when they do ultimately retire. Also included in our liabilities are unsettled accident claims. TTC self-insures for accident claims through the TTC insurance company. This balance is also actuarially determined and represents the amount to settle all claims as of December 31st, 2022. And I should also point out that effective January 1, 2022, the TTC Insurance Company now provides coverage to the city for auto claims. And you will know, if you kind of look back to the financial assets section, there's now an indemnity receivable from the City of Toronto of $7.4 million. And that effectively represents the value of the city claims which were incurred in 2022 and effectively insured through the TTC Insurance Company. So effectively, both the city and TTC are now self-insuring most auto risks, and there is some umbrella coverage in case of a major claim, which would be through third-party insurance. But for most auto claims, they are effectively self-insured. So then, if we kind of scroll down, the difference between the total liabilities and financial assets is net debt, and that net debt figure of close to $314 million represents the value of non-financial assets for which the TTC does not receive immediate funding upon their acquisition. So the examples here are spare parts and supplies inventory, where the funding is received as those parts are used as part of our operations, and as well as certain IT assets where they're funded through the operating budget over the course of the life of the asset. And so that's the net debt figure, and then it brings into the non-financial assets section, representing our tangible capital assets, inventory, as I mentioned, and some prepaid expenses. The final figure on the statement is essentially our accumulated surplus, which in bulk represents the value of the net book value of tangible capital assets, which we have received funding for. So moving on to the next statement is our statement of operations and accumulated surplus. So this reflects both operating and capital results for the year. For the operating revenue sources, there's obviously been an increase in passenger revenue, still well below where we were pre-pandemic times, but it reflects the gradual recovery that we experienced over the course of 2022. And that was the biggest, obviously remains the largest component of our total operating revenue. You'll note that there's operating subsidies reflected here of $1.4 billion. And so this is detailed in note 14. It includes both our base operating funding as well as COVID relief funding we received during the year of $544 million, of which $453 was sourced through the Safe Restart Agreement funding from the province and federal government. We do have the $900 million in capital subsidy revenue, which was recognized in 2022. And so this is recognized as assets are acquired or constructed, and all the eligibility requirements for the capital funding are met. And those are fully detailed in note 15. And then finally, that brings us to our expenses. And the expenses as required under public sector accounting standards are broken down by service. So conventional service and wheel trans, essentially. And then there's a note in the financial statement, note 16, which breaks down these expenses by object, as in wages, materials, those types of items. So then essentially what we see here is surplus for the year. What that really represents is the difference between, in substance, capital asset acquisitions versus the amortization. We have essentially our additions are represented by the capital subsidy revenue received in bulk, and then amortization is included within of our existing assets is included within these expense numbers, and again broken out in note 16. And really the difference between those two is the largest contributor to this accounting surplus of $166 million. Unfortunately, it doesn't represent additional funds that are just available to us. It's really just the increase in the capital asset value substantially. Moving on, we have the consolidated statement of remeasurement gains and losses. So this is essentially the fair valuing of our diesel hedge contracts that we have. And what we can take away from this statement is two things. One, over the course of the year, we realized reclassified amounts to the we move our effectively the gains on this are effectively reclassified to the statement of operation, as in because fuel prices were heading up, we gained a benefit that helped to offset our market fuel costs of $6 million. And then for the contracts which remained in place, which carried on into 2023, as of the year-end date, there was an effective market value gain on those of $1.5 million, which were assisting us in this, particularly in the early part of 2023, and they get recognized in the statement of operations as the dates pass under those contracts. We have a statement of consolidated statement of net debt, which shows the change in the net debt figure over the year, and the key part of the change here is that there was an increase in our spare parts and supplies inventory. A few contributors to this. One is as our LRV vehicles start coming out of warranty, there's an increase in LRV related parts to support the required maintenance on those vehicles. And then of course, given supply chain concerns over the past few years and also price increases of different parts, we both tried to be prudent in terms of ensuring that we could avoid any stockout type situations. So quantities of certain key parts have been increased, as well as reflecting the reality of the cost of these parts has been increasing over time. And because the acquisition of parts effectively funded as those are used in our operation, it does increase the net debt position, which is reflected on the statements. And the final statement is our statement of cash flow to reflect the key drivers of the change in our cash position year over year. It includes cash used in operating activities, the capital asset acquisitions, and the cash capital subsidies actually received in cash for the course of the year. And those balance out to the change in our cash position year over year. So that brings us through the end of the statements themselves. There is, of course, also the notes to consolidated financial statements. But perhaps I'll pause there. If there are specific questions, happy to take the committee through any of the particular notes that the committee might be interested in going through in more detail.
Thank you very much, Alex. That was very comprehensive. Let me ask if there are any questions. Julie, I'll start with you. Do you have any questions on the statements?
No, Ron, thanks.
Okay, Fenton?
Nope, looks good, folks. Thank you.
Yeah, no, and I'm happy with that as well. So we will be recommending approval of these financial statements to the board on June 12th. I'm prepared to do so. Julie, will you move receipt of that?
Yes, so moved.
Okay, and Fenton, you're supportive as well? Okay, that is approved. Thank you, Alex and Josie. Okay, next item is the asset retirement obligation accounting standard. We've had that previewed a little bit by the external auditors, but I thought it'd be worthwhile, Josie, if you or someone from your staff can just give us a run through as to what we should expect going into next year on this item. I don't think we need a presentation. I think the material that was circulated was excellent. But if you could just kind of walk us through high level what we should expect on this front.
Okay, thank you, Chair. Once again, I'll turn it over to Alex Kassar, who's been leading this initiative.
Great.
Okay. All right. Thank you, Josie. Yeah. So I will. We did have some background presentation, but maybe if I may, I'll share one particular slide from that deck to kind of walk through what the impact of the ARO standard is. And before I do that, I would also like to acknowledge again the team that's been working on this, the detailed work in terms of going through each of our key asset groupings and working with all the different operational areas have been led by Cheryl Toh, who's on this call, our manager of accounting policy, and there's been a lot of work reviewing our assets and first trying to identify which assets are scoped into the standard and the implication there. That's one of the key phases of this work. And then from there, trying to value and measure the value of the ARO. But if we kind of take the broad view of what the ARO standard does is it makes us recognize or try to develop an estimate and recognize the any legal obligation that we would have when we go to retire an asset. We have to estimate the value of that liability and recognize it immediately upon asset acquisition. And for the assets that we already have, we have to retroactively reflect that in our financial statements. When we see the 2023 financial statements, there will be an increase in the value of our existing assets to reflect the value of or the estimated value of the retirement cost that is for legally obligated activities that are associated with retirement, and a corresponding liability will be recorded. So I think I'm sharing one slide that has, or actually, maybe I haven't shared it yet. Let me get that up. So I have one slide here associated with impact of the ARO standard. So as I was just saying, in the past, basically the asset retirement obligations effectively only appeared in our financial statements when we actually incurred the cost to retire the asset. With the new standard, we have to recognize the full asset retirement costs, which will be recognized right at acquisition. So here's an example. We acquire an asset with where we deem that there is a legal obligation upon retirement, and the purchase of the asset costs $500,000. In our current financial reporting, it's pretty straightforward. You record the acquisition cost, you have your normal amortization for the 10-year life, and you recognize the $50,000 cost to address the ARO upon retirement. Under the new standard, you actually say, okay, I paid $500,000 for the asset. I think I'm going to have to pay $50,000 10 years from now in terms of some legal obligation associated with retirement. So I actually record $550,000 as the value of the asset and a $50,000 liability. So we're recognizing the capital cost what you pay to acquire and the cost associated, the legally obligatory costs associated with retirement. Now, it's important to note that this will be, I would anticipate to be a change in the financial statements to provide visibility on these obligations in the financial statements, but we're not anticipating any change to funding arrangements. We're going to continue funding asset retirement obligations as they come due. And so this will be a change that will be reflected in the financial statements. And we've also been, I should add on this point, working quite closely with the city to ensure our approaches are aligned on this. And
can I ask a question about that, Alex?
Yeah.
So in the example you have on the slide, the $50,000 of retirement cost, in the new world, would that $50,000 ultimately be considered a capital cost? And I'm not talking about accounting, I'm talking about funding.
Yeah.
Would we consider that a capital cost or an operating cost when incurred?
Yeah, so typically we've been recognizing these types of costs as capital. They've been getting funded through the capital program as their costs associated with the life of our assets. So that practice will continue.
Okay. And when we do our 10-year capital forecast, I assume that going forward that will include retirement costs in that 10-year forecast as well?
Yeah, and we maybe Josie can speak to this more, but I believe we have programs associated with, for example, right now, subsurface remediation. We have asbestos removal in our subway tunnels, which is ongoing, right? So as part of the ARO standard, we'd be obligated to recognize the value of asbestos removal, which need to happen in the future. If we were to retire a building or a subway tunnel or an asset of that nature. So today we have a program to gradually remove asbestos in certain areas. That program is funded through the capital budget today. And really what's changing is now we're having this advanced recognition of this liability on the financial statements.
Right. Okay. The one other question I had, maybe I can get it out now as well, is my understanding is we don't provide for retirement costs of our fleet because it's been our practice historically to sell our surplus fleet when we retire it. Is that likely to continue to be the case going forward? And I'm thinking particularly of our electric bus fleet. Do we expect that after we've run an electric bus for 10 or 15 years or whatever the lifespan is, that we will be able to sell it to a third party?
Yeah, so and as part of our scoping phase, we did look at that question, and what we've determined is that's the expectation that we have at this point. And we've also considered from a materiality perspective, because that's part of also the scoping what we're bringing in. So as of right now, we've determined the rolling stock and buses to be out of scope for our implementation, because we're assuming that our current practice will continue. We're able to sell the bus whole as is to another party upon retirement. That's what we've done to date, and that's what we are anticipating will continue to be the case in the future.
Okay. Okay. Anything else that you wanted to highlight on this issue, Alex?
No, I think the report kind of covers our status, and I think we've addressed the key the key questions in terms of scoping and how it gets reflected on the statement. So.
Okay. Well, why don't I turn it to the other committee members to see if they have any questions on this. Fenton, do you have any?
Nope, no questions. Thank you, Alex.
Okay. Julie?
Just a comment. I was really pleased to hear that the auditors think that we are, sort of exemplary in our treatment of this issue. And I really felt like this was going to really be a real burden for the organization when we first learned about this impending new standard. And it was most particularly, Ron, in what you mentioned is the treatment of the vehicles. But I have to say, after having read this report, that my blood pressure's gone down a lot. I really feel like it's both well in hand on the one side and also not nearly as onerous as I was anticipating based on, what little we knew about it. So I really wanted to thank everybody for the work you've done and also for clarifying how this is working at a slightly more granular level. I think it's been very helpful.
Yeah, I agree, Julie. Very, very good work on this item. Sorry, Alex, one other question I had, and maybe it was in the report, but I didn't see it. It sounds like the material item that we've scoped so far is the asbestos in buildings, remediating that, and the fuel storage tanks. Do we have any numbers yet as to how big we think that item might be?
That is exactly what we're working on now. So the phase that we're now into is the measurement phase, and in terms of the complexity, this is probably where we're going to have the greatest challenge, because there's many factors, right? We have to think about we're going to be trying to leverage whatever information we have. There's some areas where we've done work which is similar, and we know what it roughly costs today, and we can use the model. But then you have to kind of think about, when is that asset due to be retired? And some it's perhaps clear, and others, particularly, you think about asbestos in a subway tunnel. I think we hope it's never ultimately retired, right? So, there's a lot that now has to go into what assumptions do you put onto certain things, and also when you have very old properties, another challenge that we are experiencing is we suspect based on what we know that there's probably an issue, say particularly with asbestos here, but then finding details on precise amounts and all this, you have to make some assumptions as part of the measurement phase, and so that's really the focus of our work now. We wanted to get through the scoping phase to know where we need to focus, and now it's about measuring and coming up with that estimate. Okay, but there will be a lot of assumptions.
Yeah. So stay tuned for that item.
Yes.
Okay, Fenton, can I ask you to move receipt of this item, please?
So moved.
Okay, Julie, you're in favor?
Yes.
Okay, that's carried. I think we are through all of the financial statement issues for this year. So with respect to our colleagues from KPMG, you're welcome to stay on or sign off whenever you like at this point. Thank you for your help. Okay. Okay, item number 6 is the annual review of safety, health, and environment. Betty, I think you're going to take this one.
Yes, I am. Good morning, everybody. So today's presentation, I'll wait for it to pop up here and then we can get started. Okay, thank you. So today's presentation will provide an overview of our annual Safety, Health, and Environment Management System review. I'll touch on some key performance indicators and provide updates on projects and initiatives. I'll cover the restructured goals and objectives and next steps. Next slide, please. So the TTC has outlined our commitment to safety and our safety, health, and environment policy. That's our overarching statement. Our goal is to eliminate all injuries and occupational illnesses and to minimize our impact on the environment. We manage and mitigate our safety, health, and environment risks in a systematic and consistent manner through our Safety, Health, and Environment Management System. And as part of our management system, a review is conducted on an annual basis. The annual review evaluates our management system to ensure that it continues to be suitable, adequate, and effective. And as you all are aware, under safety and environmental legislation, TTC board members are considered directors of a corporation and have prescribed duties to take all reasonable care to ensure the TTC complies with safety and environmental legislation and all regulatory orders. And as such, they should be aware of TTC's safety management system and its performance. Next slide, please. So this slide here depicts the safety management system and how it's structured. It's a comprehensive, proactive approach to managing risk by integrating all processes into a continuous improvement cycle, which everyone's aware of as the Plan, Do, Check, Act. It's based on other management system standards. This one in particular is the health and safety one, which is the ISO 45001. The annual review, as you can see on the slide, is part of the ACT function. And as part of our current review, we assessed performance during 2022, and there's various inputs to this process. We look at key performance indicators, status of projects and initiatives, investigation findings, regulatory oversight, which is related to legislative changes and compliance. And of course, the review also outlines our corporate level safety, health, and environment goals and objectives for 2023 to 2027. Next slide, please. So the next several slides provide information on the adverse trends in key performance indicators, including those related to occupational health and safety, which you see on the slide, customer and public safety, and security. In addition to analyzing our safety KPIs at the end of our annual review cycle, we do review these on a regular basis, on a monthly basis actually, at our Safety, Security and Environment, our SX Executive Committee, which is chaired by our CEO, and it's comprised of the entire executive team. We are also will be performing deeper dive data analyses at regular intervals throughout the year. And these analyses will include looking at the various trends, what is driving them, how programs and initiatives are affecting those trends, and what actions can be taken to address these trends, as well as looking at any exploratory analyses to determine areas for improvement. So turning to this slide specifically, this slide shows you the lost time injury rate and the no lost time injury rate. So for the lost time injury rate over the 5-year period, we did see an upward trend. And that was mainly driven by an upward trend in biological exposure injury events. And that was primarily due to occupational injuries related to the COVID-19 exposure. So when we took away the impact of the biological exposure injury event, we showed there was no evidence to support any trends over the 5-year period. So COVID did have a big impact in terms of the lost time injury rate and that upward trend that we were seeing. In terms of no lost time injury rate over the 2-year period, you can see that it's the blue line on the chart that's up there. Over the 2-year period, there was an upward trend, and that was mainly driven by acute emotional event, assault, a collision type injuries. And in terms of actions that we're taking, specific objectives to address these trends, it included things like we have a well-established suicide prevention program and an associated action plan to intervene in potential suicide incidents. Those are the ones that would be impacting the acute emotional type injuries. We provide suicide awareness training to our frontline staff. We've initiated a psychological health and safety project. And of course, you've heard us talk about a number of times about our assault prevention action plan, which we've reported to the board. And working groups are in place to track and monitor progress of these various action plans. Next slide, please. So moving on to customer and public health and safety, I'll first talk about collisions before we move on to customer injuries. So what you see on here is the surface collision rate. So over the 2-year period, we did see an upward trend in the bus and streetcar collision rates, no trends for Wheel-Trans. In 2022, last year, which is the review period, as we were entering into the recovery phase of the pandemic, traffic volume has also increased towards pre-pandemic levels, and that's what's impacting the surface collision rates, as you see in the chart here. So it is coming back to pre-pandemic levels in terms of the collision rates. However, we have a number of projects and initiatives to address collisions. This includes, we have a traffic safety committee, which was established back in 2018, that oversees the implementation of a variety of traffic safety initiatives, including communication campaigns, rules compliance audits, training improvements, and also looking at technological and engineering solutions. We also collaborate with the city and other partners on traffic safety projects. Next slide, please. So moving on to our customer injury rate. Over the 5-year period, we do see an upward trend in the bus, subway station-related and subway vehicle-related customer injury rate. And this was primarily due to the significant drop that we saw in ridership over the pandemic period. As the ridership has increased towards pre-pandemic rates, this has had a corresponding impact, especially on the subway customer injury rates. As you can see, the subway one is the green line there, and it is coming back down. Because of the numbers here, the injury incidents are very small. There's a huge impact. Even a small change impacts the rate because it's over 1 million boardings. So it is impacted by the ridership. In terms of actions, we have customer safety messaging related to slip, trips, fall prevention. We promote that in our stations through social media campaigns as well. And we are, as I mentioned earlier, we are doing more of that deeper dive analysis in terms of the various categories. So this will be one of them with customer injuries to allow us to better understand trends and implement any additional corrective actions. Next slide, please. Moving on to security, I won't spend too much time on this because we've updated the board on this a number of times related to offenses against customers and offenses against employees. So the review period here was 2022. So we did see that upward trend. We were seeing that in both metrics. However, the good news is if we take a look at our Q1 2023, so more current data, we are that trend is reversing. So we are going in the right direction. Of course, we aren't where we want to be, but we are trending in the right direction. And you are aware of the number of actions we've taken in this front in terms of creating that assault prevention action plan, which I've referred to before. We do have a joint labor management committee that we established in partnership with our ATU Local 113. And of course, you've heard of the frontline and community support that we've now have through increasing presence in the transit system and the ongoing partnerships we have with external agencies to provide supports to individuals experiencing homelessness and those who have complex needs. Next slide, please. So this slide provides an overview of key accomplishments on projects and initiatives during the review period. All the detail is in the report before you. What I'll do is maybe highlight one or two just for reference. The one I would like to highlight is the Safety Connect project. This is a project that we initiated back in 2018, and it was to implement an enterprise safety software solution to manage all of our safety and environmental processes and data. As we've reported before, we did go live with that back in 2020, first within the Safety and Environment Department in terms of centrally entering the data into the system. But now we've expanded that. We're onboarding various departments across the organization. So the focus last year was on bus, streetcar, subway, and wheel-trans transportation departments, stations, and transit controls. So they have been onboarded, and we're continuing to do that this year. And we are also going live with our phase 2 of this project, adding additional modules that will manage other processes like claims, case management, occupational hygiene sampling, managing our safety data sheets. So that's also part of what's happening this year in the next couple of months. But it's been a huge effort on this, a number of years, but I think it's a good. It's excellent for us to have sort of this one source of truth where all safety-related information is in one place through the Safety Connect solution. The other thing, just quickly to mention, again, all the detail is in the report, is on business continuity. In 2022, we did establish that section with the mandate of establishing a business continuity program for the TTC. Year 1, which was last year, the main objectives were to establish the organizational design, the policy framework, and templates to support the business continuity implementation. So we did, in terms of accomplishments, formalize, get approval on the corporate standard for business continuity. We completed a gap analysis report highlighting areas for improvement and, of course, creation of various program templates. Next slide, please. Regulatory oversight. So regulatory agencies such as the Ministry of Labor, Immigration, Training and Skills Development attend TTC facilities to monitor legislative compliance, to respond to complaints and follow up on incidents. During this last review period for 2022, we saw 89 occupational health and safety incidents resulting in an interaction. This is a decrease, so it's good news, decrease from 150 interactions that we saw in 2021. In terms of orders to comply, there were 11 orders issued in 2022. This is a decrease from, this is an increase from the 9 we had, a slight increase that we had in the previous year. But it's important to note that all of these have been complied with and they're considered to be closed. Next slide, please. So our goals, again, I won't go into too much detail on this, just to let you know that we have updated and restructured our safety, health, and environment goals to better support continuous improvement of our safety management system. The goals are outlined over a 5-year period from 2023 to 2027, with an additional breakdown of the short-term objectives. Under each goal, we have multiple strategies. This is how we framed them now in terms of our goals and objectives. These strategies really describe the approach or method to achieve those goals. Under each strategy are the objectives, which are either long-term or midterm. There are also annual objectives, which are really the stepping stones that need to be completed in 2023 to get to that big objective. So this is how we've reframed our goals and objectives, and I think this will better support our efforts to continuously improve our safety management system. Next slide, please. So in conclusion, it's recommended that the Audit and Risk Management Committee approve our approach for continuously improve the effectiveness of our safety management system and our approach to identifying priority safety, health, and environment issues, and of course, our approach to developing safety, health, and environment goals and objectives as described in the report before you. And the second recommendation is to forward this to the board for information. And that concludes my presentation. I'm happy to take any questions at this time.
Thank you very much, Betty. Great presentation. Julie, do you have any questions?
No, I don't, Ron. Thanks.
Benton?
No question, but just a small comment. I think we should be quite proud of what we've accomplished, and I'm really looking forward to seeing how this system evolves over time. So thank you.
I had a couple of quick questions for you, Betty. One was when we collect stats on crashes and safety, do we include stats for contract services at Wheel-Trans, like I'm thinking of the taxi services provided?
That's a great question, Chair. I do have someone from my team on the call here. And just to reframe the question, you're asking if the collision rate includes the contracted services for Wheel-Trans, correct?
Right, and also the security stats. I don't know if there have been any incidents in contract taxis, but if there were, would they be included?
Yeah, my understanding is for Wheel-Trans contractor services are not, but I'm going to ask Christine Triggs to confirm that for me. I believe she's on the line.
Yes, hello. The contractor services in terms of Wheel-Trans are not included in our collision statistics.
Okay, could I ask that you follow up on this and determine whether it would be possible to do so, both for the security as well as the crash data? And my reasoning is, these are our clients, they're our customers. So if things are happening in those services, I think we need to know whether there's any safety or collision issues that we need to address. I understand it's more difficult to address when you're going through a third party, but there are still ways that you can perhaps deal with that. So if I could leave that with you as a takeaway.
Absolutely. Yep, we will do that, Chair.
The other question I had, and this is more curiosity than anything, there was a reference in the report to the FTA reviewing Boston's transit system because they've had a bunch of catastrophic issues. Somehow that escaped my attention. I didn't realize that Boston had gone through, a difficult time. Can you talk to that a little bit as to what kinds of catastrophic incidents they've had and what's coming out of that review by the FTA?
Yes, I can do that. I'm just trying to pull up the information. There was a number of findings from that FTA audit that was done in Boston. It was related to training requirements. One was related to training requirements. Their staff were not did not meet all of their recertification training, so there was issues around compliance on that. There was issues around, if I recall, not enough resources to deal with various work. So there was overtime being incurred, fatigue issues as a result of that. The other item I think was related to issues in the yard and their procedures around how they secure vehicles in the yard. Those were the three that I recall. Christine, if you can provide, I can't find the actual reference to it right now. If I was able to capture the main highlights from that incident, maybe you could, from that audit, you can add anything more to it. And the reason, Chair, we looked at it is it was more for lessons learned if there's anything that we needed to do on our end to take a look at our own practices. And of course, we've done that exercise and we are taking an internal look to make sure that our training records are accurate and that our folks are compliant in terms of various certification, et cetera. But Christine, if you can just provide any additional highlights from that FTA review, please.
Yes, you got the majority of the special directives. There's just maybe one I want to highlight, major mismanagement of various aspects of track, asset, and infrastructure maintenance.
Right. Okay, that's very helpful, and it's certainly appropriate to follow up on those kinds of reviews. Maybe a related question. Do we compare any of our safety data to other major transit systems?
We do take a look at that. Yes, absolutely. I don't have any recent comparison, but that is something that we do. From what I know, I mean, we do have, it's comparable to what other agencies are experiencing as well in terms of their data, but we are part of COMET and GOALS, so those are through those benchmarking groups, we have an opportunity to compare ourselves with other organizations, and we continue to do that.
Okay, perhaps that's another follow-up item for next year's report. If you could include some of that data in your report to give us a sense of how, you know, we're stacking up on some of the measurable items against other transit systems, I think that would be helpful.
Yeah, we can certainly do that, Chair.
Right. Okay, I had no other questions. So Julie, are you prepared to move receipt of this item? I think we're passing it on to the board for their approval as well.
Yes, I will move that, Ron.
Okay, Fenton, you're supportive? Okay, that is approved. Thank you very much, Betty. Very good report. Okay,
Thank you,
next
Chair.
up is the work plan status update from Audit, Risk and Compliance. Viraj, I will turn that over to you.
Perfect. Thank you, Chair. So we've got one deliverable from ARC that's coming to the ARMC for this meeting. It is the 2023 ARC Work Plan Status Update. We will also cover a change to the 2023 ARC Work Plan, where we will have an additional review, as well as we'll provide a brief update on some of the work we've been doing around ERM, as well as some of the facilitation activities surrounding some of the AG support work we've been doing as well. In terms of the ARC Work Plan update, we've currently got 3 projects that are underway. The subway maintenance, transit operators, as well as a fare evasion review, which is being added currently. The subway maintenance and transit operator hiring reviews are substantially complete in terms of field work, and we're starting to move to the observation validation phase. We will communicate those projects in terms of the activities and observations once completed. In terms of the ARC audit plan addition, at the February ARMC meeting, ARC noted that the work plan was flexible to add, modify, remove projects based on need, resource availability, etc. And those changes would be communicated to the ARMC. As such, we've added a fare evasion review, including study, to the ARC plan. This is a large review, and we've broken it into 2 phases or parts. One is surrounding identifying observations with the inspections process and following up on a few past observations. And the second would be on the fare inspection study to calculate a fare evasion rate, both by mode and in aggregate. And as I've said, we have recently started the field work for this review. And so currently, we are targeting to communicate the results of this fare evasion review to the RMC at the November meeting. We have not done an immediate substitution for this addition, but we'll review our resourcing requirements and communicate as appropriate at the next ARMC should a deferral be required. In terms of the supporting of AG activities, the AG is actually looking, the Auditor General is looking to do some validation of remediated observations from the prior review. So the first step in order to be able to do that is to receive the appropriate management responses to be able to complete the remedial activity. ARC has supported management with this process, and we've completed that at the end of April. The AG anticipates to take that to the city ARMC in July, but as expected, it'll go in as unverified or not validated by the AGO, as they have not had an opportunity to validate if these observations are truly complete based on their requirements. Therefore, the second step would be that they would be coming back in the fall to do some remediation testing, and there'll be an update provided to the TTC ARMC in October by the AG, and before going on to the city ARMC in November. ARC will support with facilitating and coordinating and supporting management on this initiative. In terms of the ERM activities, the risk identification meetings have been conducted with executive management and the ARMC team members. Currently, we're analyzing the information gain and performing some limited benchmarking on this. We just finalized on a consultant that'll help with assist with this process, including providing some training for both executive management and ARMC members as well. We're also actively hiring for some open roles department-wide, of which some fall within this risk management space. So that's the general update that we've got for the ARMC. I'll open it up to questions.
Thank you, Viraj. I met with Viraj ahead of time and gave him approval to go ahead with the change to the plan, subject to approval by the committee. Just wanted to let the committee know that. Fenton, do you have any questions for Viraj?
Nope, no questions.
Okay. Julie?
No questions.
Okay. Julie, will you move the approval of the addition of the fair evasion report to the work plan?
Yes, so moved.
Okay. And Fenton, you're in favor of that? Okay, that's approved, Viraj. Thank you very much. Okay, next item is the AG fair evasion recommendations. I think there's a presentation on this. Angela or Amrita, are one of you going to take this, please?
Thank you, Chair. Good morning. So today, Amrita Sidhu, who is our head of revenue protection, is going to walk through the AG updates. The last time that we presented this was 3 years ago. We have been working with the fair inspectors and this group on progressing on the AG recommendations phase 1. And Amrita is going to walk through where we are and also really how this dovetails with the actual strategy within her group and the recent cultural changes that we have been doing with the fair inspector team. Amrita.
Good morning. Thank you, Angela. So as Angela mentioned, today's discussion is a high-level status update on the TTC's revenue protection strategy based on the 2018 City of Toronto Auditor General Phase 1 recommendations, so mostly focused on the fair evasion aspects. Next slide, please. And so for discussion today, next slide, please. You'll see here an overview of a timeline that relates to key events that have happened since 2017 as it relates and impacts our revenue protection and fair compliance strategy. And so you'll see that we're, and we'll talk about this further in another slide, but you'll see we're really anchored by some key pivotal points that have influenced how we both determine what our revenue protection strategy is and how we execute it, as well as how we remain agile in terms of being responsive and reactive to trends and other data as it's being demonstrated. So you'll see here the Toronto Ombudsman findings are a key pivotal point, as well as the Auditor General findings, which was subsequently followed by the TTC's ARC study, which we'll get into in a moment. And then you'll see some key items that have happened since as it relates to equity. Next slide, please. So since our last update, the TTC has continued to strengthen controls and expanded our data analytics to improve revenue recovery, increase the availability and reliability of fair payment equipment, and to place the TTC resources appropriately to educate customers, but also in order to protect our fair base. As you can see from this slide, the TTC's revenue protection strategy is really a balancing act between addressing customer behaviors towards greater fair compliance and efficiency on the one hand, and ensuring that fair enforcement practices are equitable, customer service focused, and executed with the appropriate discretion on the other via our culture change program. As I mentioned, data analytics are regularly monitored to ensure responsiveness to trends, seasonality, events, and other indicators. Next slide, please. So as you can see here, there's been significant impact as a result of the Ombudsman recommendations. You'll see that we have some significant policy and guideline development in place. A lot of these key items, including some of our policy work, will be presented at the September board meeting. Training continues to be a key area of focus, starting from new recruits all the way to ongoing training that all fair inspectors undertake. External consultation continues to be engaged, including our two U of T professors, Dr. Owusu-Bempah and Dr. Scott Wortley, who continue to provide us with not only guidance and advice, but also deliver one of the two-day training that all fair inspectors have undertaken. As I've mentioned, the fair inspection deployment strategy remains nimble and is striking a balance between the recommendations of both the Ombudsman and the Auditor General. As well, we continue to consult with TTC's external advisor on diversity and inclusion. In addition, as a result of an Ombudsman recommendation, the TTC launched an office that is entitled the Fair Inspector and Special Constable Complaints Office to ensure that all complaints involving TTC fair inspectors and special constables are investigated, as well as providing input on policies and services and training. I should note that in addition to the training and some of the discretion that's executed in the duties that the fair inspectors undertake, it requires additional documentation time to ensure that discretionary decisions are adequately noted. Next slide, please. So the board has heard in the past about our culture change program, which consists of 4 key pillars. The objective is to have safety, security, and revenue protection services that are customer focused and founded in respect and dignity for customers and employees. We continue to conduct extensive consultation by working with experts in the industry to inform change. Next slide, please. So as a recap, in 2018, the Auditor General Fair Evasion Study found a weighted average of 5.4% for the fair evasion rate on all 3 modes, over $60 million in annual uncollected revenue, and in total recommended 27 key changes. Next slide, please. In 2019, TTC's ARC also completed a fair evasion study. And so you'll see here on this slide as a recap, it found slightly higher figures. So approximately 5.7% weighted average, over $70 million in uncollected revenue, and 16 recommendations to complement what the Auditor General found. Next slide, please. So I want to spend a little bit more time on this slide in particular. As I mentioned, there was 27 total phase 1 recommendations. We're very proud to say that we've made significant progress on all 27. To date, and you'll see from this chart, 5 have been implemented and deemed closed by the Auditor General. And I'm happy to report that an additional 10 have been implemented by the TTC and are waiting Auditor General approval. The remaining 12 continue to be in progress, and we're actively making strides. As you can see, they're each various categories. In many cases, and I'll highlight them in the slides to come, we have exceeded what the recommendation has been, and we continue to make progress against, continue to enhance and improve on all of these categories. Next slide, please. So I'd like to focus on 2 of the key modes and progress that we've made. With streetcar deployment, we have continued to focus in the downtown core in order to promote increased inspections and to ensure that where appropriate, tickets are issued, as well as cautions. The objective is to increase presence on high ridership routes and in core areas. In addition, we continue to focus on increasing the number of inspections and minimizing wait times between streetcar boardings. With respect to our subway deployment, we leverage data, including Fairgate information, to deploy fair inspectors where there are highest rates of fair evasion events. We currently balance between having fair inspection teams in the morning and afternoon shifts to conduct concession fair and media inspections in particular. As I mentioned, Fairgate sensor data is used to inform our deployment strategies and we will continue to do so. From a technology standpoint, we are currently collaborating with Presto and are testing new handheld point-of-sale devices. These devices will increase efficiency by decreasing inspection time and allowing fair inspectors to process fares on vehicles, providing virtually no downtime for the TTC's fare payment system. Next slide, please. One significant win is some work that's been undertaken to address concession car fraud. So recommendation number 19 was a recommendation to work with Metrolinx to determine the feasibility of potentially suspending child Presto card usage until appropriate controls are in place. As a result of the work that's been undertaken, and we specifically point to a change in both the light and the sound when an individual is using a Presto child card, there's been a dramatic reduction in the usage from 6% to 2%, and there's no longer a need to suspend the child Presto card usage. And you'll see from this chart here the significant decrease. Next slide, please. The Presto system and equipment update remains ongoing. Some key items that have been undertaken including reducing the number of illegal entries, updating fare gate settings, and redistributing resources to high-risk entrances. As well as I'd highlight the installation of 37 fare line barriers at key stations to eliminate the gap between the collector booth and the first fare gate. Earlier this year in Q1, Metrolinx replaced the Presto fare payment devices with new devices on all TTC vehicles. These new devices enable the TTC to implement open payments, accepting debit, credit cards, and NFC contactless payment via smart mobile devices. Next slide, please. So our next steps include continuing to build on the progress that we've made so far as it relates to the Phase 1 recommendations. As I mentioned, all 27 have been actioned. 4 have been continued to be deemed closed, and 10 we're waiting for updates on as the TTC considers them implemented. And as you've heard earlier from Faraj, the Audit Risk and Compliance group within the TTC will be conducting a fare evasion study, and those results will be presented to this committee in November. Those findings will also be used by Revenue Protection to inform our fare evasion targets, as well as continue to inform our deployment strategy. These targets will also be used to inform forecasted passenger revenue and will be incorporated in the 2024 budget process. As well, we will provide a more detailed status update of the recommendations and the progress that we've made in the October timeframe to coincide with the Auditor General presentation to the TTC Board. That concludes my presentation, and of course, I welcome any questions.
Thank you very much, Amrita. Any questions, Fenton? Julie?
Yes, I do. We've used a lot of data from the AG and our own, and some of it is obviously working very well. Like I remember being absolutely floored by the child usage at the King subway station at 10 at night. I'm wondering what we've done in the qualitative area, and the reason I'm asking that is because when we hear from interveners, deputants at our meetings about fare evasion, and in particular, obviously, the enforcement, there are a lot of people who really feel like this is an attack on the poor. And in my own experience, I'm sure that there are a number of people who are not paying because they can't, but there are an awful lot of people who are not paying and they can. I've met people who are very, very well-heeled and say, oh, my kids, they would never pay to take transit. And they can pay. So I'm just wondering if we have any sense of any of these, who's making up this group of people who are not paying. And then an extension to that is motivation. And, there is a similar issue with people, I'm going to use the word stealing television, kids or others, people who were able to end run encoding and were able to take movies and other television without paying the fees, which ultimately go to the people who provide it and to the producers. And they said they likened it to the difference between a parking ticket and a felony, that this was like a parking ticket. So what? I got a parking ticket and, I'm risking a parking ticket, so I'm okay with that. And I'm wondering if we have any sense of this, because it's a lot of money, and it may also impact how we go about where and when we enforce.
So I can speak to some of the qualitative points that you mentioned. One of the key areas really goes back to the training that we provide fair inspectors, and in particular, I would point to the use of discretion and how that influences the way in which fair inspectors execute their duties. So while education continues to be important, at the same time as well, we have advised that ticketing has resumed. And so where there's a discussion and a fair inspector determines that an individual simply did not want to pay or has potentially given some indication that in the past that they have some knowledge and have decided to continue to avoid paying a fare, the fair inspectors have a variety of different options, including providing a ticket, and that will go through the court system for determination. However, we've instructed the fair inspectors to ensure that they use all available options, including providing verbal warnings, written warnings, as well as issuing a ticket. Specifically, and we just talked about child Presto card fraud, the TTC has zero tolerance for that. So where appropriate, we will ensure that we follow the process, which includes seizing that card if it's being used inappropriately.
So in addition to that, we're also focusing, we know what's happening in various different modes and at various different stations. So part of the deployment is also going to be focused on those key subway stations where we still see some child Presto card activity, to ensure that those areas are addressed and that we can issue the appropriate fines in those locations too.
So, okay, I accept all that. I'm just wondering, and I did ramble on a lot, I'm sorry about that. Do we know what percentage of people, or do we have any clue what percentage of people are not paying because they can't versus the percentage of people who are just choosing not to pay?
I would say at this time, there's no way for us to have complete line of sight as to make that determination, other than for a fair inspector to have a dialogue or a discussion with an individual. And because of the training and the experience that many of the fair inspectors have, they're able to determine in fairly short order, and also technology will continue to help us as well as we get into phase 2 of the HH POS devices, which will provide a little bit of history on Presto cards as well. So that'll be another indication, and we will be able to determine patterns of payment as it relates to Presto cards.
And so, go ahead. So we also know where some of the fare evasions happening, like in terms of streetcar areas, right? So downtown in the financial district, for instance, has been something that we flagged in the past. So in terms of locations, we were able to determine where we are seeing some fare evasion, and that's where we we're putting out deployment in those areas also.
So, for example, the fact that we're getting a bunch of fare evasion happening, on the King Street streetcar would lead one to believe that there's at least a healthy proportion of these people who just aren't paying. I would also note that I hopped on a bus once in front of a high school that I'm not going to name that serves a very good neighborhood, and not one kid who got on paid. But I did jump in, and that's it.
Well, and to add to that as well, we monitor the fare evasion rates on each route on a daily basis. So we are trending and responding in a very short period of time. So to your point, if we are on a specific route and we're monitoring that, we are able to respond to what we're seeing in terms of fare evasion rates.
And if I just may add that now that we're back out on the system, with the compliance work that we're doing, we really are trying to assess the situation more fully. So as we're encountering these sets of circumstances, I think we know anecdotally, but it's giving us a bit more information to assess the situation more thoroughly. But I think clearly we would all agree that we've heard the same stories and see the same thing, where there are individuals who can pay who are choosing not to pay versus those who can't or don't understand the system.
Yeah, and that, in a way, for me, it's just how we can have a good, fulsome conversation with the public, many of whom are distrustful of us on this topic, and also who feel like we're picking on people who already have enough problems. And that's not what this is about. That's really what's motivating my questioning on this. Because if we did have a little more information to buttress this, it might help assuage some concerns out there in, various communities that we're kicking people when they're down. So that's really what's motivating my interest in trying to delve down one more layer if we have it, to find out, how much of this is us going after people who we should be going after, anyway, that's what this was about. So, I know, Josie, you mentioned it's anecdotal, and that's my own experience as well. And I was just hoping we had some way, I don't know how you do it, but to put some arms around what the magnitude is, like what's the breakdown of that, lost $60 or $65 million between people we're never going to get that money from, frankly. And some of it is structural. I know that, every transit system in the world probably deals with this in some fashion, versus the collectible money, the money that we are really leaving on the table from people who aren't paying, who can.
Maybe one follow-up to your question, Julie, if I can hop on, is that there are programs that the city has to deal with people who can't afford transit. And, I understand that they don't deal with every situation. They're not, foolproof. But are our agents trained to advise people who haven't paid, who they suspect might not have the ability to pay, to take advantage of any of those city programs?
Yes, absolutely. That's part of the training and the education that's provided by fare inspectors, and really supports that customer service lens that we provide. So we've been continuously providing education. We're continuing to provide education. But I would just say, in addition, from an enforcement standpoint, the fare inspectors also have other options available in their tool belts today, which includes, as I mentioned, providing a warning or where appropriate, issuing a ticket. So that's part of the discretion that they provide, but certainly education continues to be the focus point.
So maybe one of the things that we could collect data on, and we'd have to research this to make sure we're collecting data appropriately, is the number of referrals handed out to people to follow up with city agencies to provide assistance, which might get at least tangentially the issue that Julie is raising about how much of the problem is actually affordability versus ability. But I'll leave that with you. Julie, did you have any other questions or comments you wanted to make?
Nope, just appreciate the good work on this. And I'm glad that we are back enforcing, because, we seem to not be able to win. We have to have a fare increase. And one reason is that we're short a lot of money. And, so I am, for one, am very pleased with these enforcement issues. So thank you for your work on this.
Yeah, me too, Julie, and I was going to make the same point that 5% is a big number for TTC, and it's one of the reasons why our fares are as high as they are.
Yeah.
The one other question I had, perhaps for you, Josie, is could we investigate the possibility of including this data in the notes to our financial statements? And what I have in mind is a note on revenue that says that we had uncollected revenue of $70 million or whatever the number is due to fare evasion. And I guess the question would be, first of all, is it appropriate to include that kind of data in such a note to the financial statement? And secondly, is the information that we have through these various studies sufficient to satisfy that number being auditable? Because I think it's, to me, it's kind of like, uncollected accounts, or like it's a real loss to the TTC, and I think it would perhaps command more attention if it were an auditable number that was included somewhere in the financial statements.
So through the chair, I would say that it's worthy of recognition as, our kind of version of slippage, shrinkage, but at the same time, I can't say it at this point that it's audible because quite frankly, one of the reasons why Virage is going out there is to help us with that. I mean, we have fairly good stats on streetcar fare evasion. We have Fairgate information, but that doesn't mean it's all stations. And the one area where we don't have good information is on our bus network. So it's just not auditable, but it is something that we could speak to, maybe not in the statements, but bring forward maybe as part of our year-end variance report. So that's something that we could look at.
Okay, I think it's worth keeping in mind, as we improve our capability to measure this item. I think it would be a laudable goal to get to some kind of standard that was auditable. And maybe we can't afford to get there yet, but if we can keep that in mind as we're doing this work, I think that would be appropriate.
Very good, thank you.
Okay. Okay, if there's nothing else on this, I think we're just moving receipt of this item. Julie, can you do so?
Yeah, I'll move that.
Okay, Fenton, you're supportive? That's approved. Okay, I think we're going to move into committee of the whole to deal with the last item on the agenda on TT Cybersecurity. Chris Ann, can I let you make the appropriate, or tell me what the appropriate motion is and start that process? Oh, there it is. Okay, so the motion is that the ARMC recess as committee of the whole to consider the security of the property, a confidential item on cybersecurity dealing with the security of the property, municipality or local board. I will move that. Fenton and Julie, are you supportive? You are, so that's carried. I assume, Chris Ann, you probably need a couple minutes to move us in camera.
That's correct, members. Just a few moments, please.
Okay, thanks.
Members, we are now back in public session.
Okay, thank you. Let's approve the items tabled in the committee of the whole. Julie, will you move that?
Yes, I will move it.
And Fenton, you're supportive? That is approved. Okay, I think we are prepared to adjourn. I will move adjournment. Julie and Fenton, are you in favor?
In favor?
Okay, we are done. Thank you very much, everybody. Appreciate your time.
Thanks, folks.
Yeah.
Bye. Thank you.
Thank you.